Hey everyone, welcome to the Startup Voyage podcast. And in this episode, we're going to uncover decentralized finance through the lens of TermStructure. It's a company that's redefining fixed income or fixed rate and fixed term borrowing and lending protocols in DeFi. The company has been founded by Jerry Lee and Vincent Lee of $4.25 million in a seed fundraising round. And this reflects a growing demand for these products in DeFi markets and shows the increasing maturity in the market sector. So today we explore TermStructure's journey and the unique features of their platform. And we're going to discover how what they're doing to bridge the gap between traditional finance and decentralized finance and essentially reshaping DeFi with a structured interest rate system and comprehensive hedging instruments. So I'd like to welcome to the show Jerry Lee, one of the founders of TermStructure.
Thank you, Arthur. Thanks for for your time and coming approaching to us and arrange all the whole thing. Thank you.
And I just wanted to let the audience know, I'm the one reason why I wanted to reach out to TermStructure, because not only you guys raise money, but the market has been very tough, where many projects in the past have relied heavily on raising through a token sale, listing on some venue to just get the capital to do what they need to do. You guys just focus on just building a quality product. And actually, DeFi was, the DeFi summer, right, of last year kind of came and went. And there's been a lot of scrutiny across Web3 in general, to be honest, NFT, whether it be NFTs, DeFi, or, any other place. I guess everyone's just focusing on just building and doing infrastructure stuff. But I want you to share then your background. Like, how do you decide to build TermStructure, and what inspired you to jump into the DeFi space?
Okay, thank you. Actually, it's quite interesting, right? So I've been working in the bank for 25 years. I've never thought of a living bank to do like a DeFi or crypto. And so I was running a fixed income and currency trading for the bank. And basically, most of the time I was focusing on fixed income. And I believe that it is a very important tool for people to manage their balance sheet and for people to manage their asset and liability. Right? So I see that is a fundamental infrastructure for the financial ecosystem. Right? And during COVID, I actually have less time traveling, and I spent time looking into DeFi. And I was surprised. I found it very interesting, and I find the efficiency of the blockchain and transparency and the whole infrastructure is just amazing, and a lot of things that the financial system should use. And but I figure out there is no fixed income, and I cannot believe any financial ecosystem without fixed income. Right? So then I think through. I thought fixed income in DeFi need me more than TradFi. Right? So that's why I decided to voluntarily raise my hand, retire, and jump into this space. So
Okay.
here I'm.
Okay. So I guess when you jump to this space and you've had, a lengthy career in banking, what specific problems, especially in decentralized finance, are you deciding to solve? And how does your approach differ from some of the other solutions that are out there today?
Yes. Just like I said, right? So in DeFi, there is no fixed income.
Yep.
There is no yield curve, and that means there is no discount factor, right? There is no forward. There is no way for people to do the valuation for any future cash flow, right? So if you look at our real world, like 500, 600 years ago, there is no government bonds, right? There is no yield curve, and today we have a huge volume trading on a simple U.S. Treasury markets, right? So can you imagine that if you wake up tomorrow, the U.S. Treasury market is gone, the whole financial system will collapse. And this is where we are today in DeFi, but we don't know, right? Do you see that's the problem? Right? So that's why this is what we are trying to build up. And we look through the people who did that before, right? So most of the people, they use the automatic market making. and peer-to-peer process. And we think through that. In TradFi, we find the most efficient way on fixed income is the order book, is peer-to-peer, right? So if you want to stay with that, then we need to find a way, and which is like we don't see anyone has been done before, right? To just bring these fixed income into the interest rate products into P2P on DeFi, right? So we wanted to build a full fixed income market that actually include primary markets through auction, secondary markets, order book trading, and the repo market using order book and to take like fixed income token as a collateral to borrowing lending, right? And this we wanted to stay on Ethereum layer one. So because this is the most TVL stays, right? And so we needed the off-chain solution. We go with ZK rollup. We develop in-house, and we build like a force withdrawal evacuation, and all these are the high standards that we want to make sure the users are comfortable with their asset on chain on our protocol, right? So this is something that we never think anyone is doing anything similar, right? So this is the way we differentiate ourselves.
Okay. I do think it's a gap because I think if you're in DeFi and you're trying to, I mean, whether or not finance is centralized or decentralized, but the product itself, fixed income is a common. It's almost like we must have it. Is it because the underlying assets people are providing are not strong enough?
It's more, yes. I have a similar thought. I feel like most of the fixed income we feel it's like a time deposit or
Mm,
like a certificate deposit kind of thing compared with the TradFi, right?
mm,
So if you look at that, we wanted to create something that the lenders would be able to de-risk their lending position, right? We want the borrower would be able to choose their own collateral and the fixed rate and the fixed
mm,
borrowing. Particularly if you are a trader running a strategy, you want the fixed rate. You don't want the floating rate, right?
right.
And you sometimes you want the 6 months or 12 months fixed rate, right? And then you want the certainty to manage your asset and liability to match your duration, right? But the current the fixed income protocol, they don't provide that, and they don't
Mm,
provide liquidity for this secondary market. So
mm,
I would say this is a big gap, and the constraint for them, I would say, is like if they stay with automatic market making and peer to pool, then that's the only way you can do, right? So you have to jump out like a different area to look into the scalable solution, right?
mm.
Where you also needed to find a scalable solution with providing the most comfort for the users, right?
So I know that in DeFi space, a lot of market makers are the ones that actually went out big over the retail investors. Where do you see the opportunities are for just a everyday regular person looking at DeFi opportunities? When they look at your platform, what is the benefit to them?
Okay, I would say the benefit to them will be the key benefit is the certainty, right? So
Mm,
for people to have a certainty in terms of for borrowers, they were concerned about the cost of funds, right?
mm,
For lender, they were concerned of the return, right, of their investment, right?
mm,
We provide certainty for both of them, right? So and with that, they will be able to do better financial planning, right? They will better to manage their future cash flow, right? They will be able to manage their asset liability like duration match, right?
mm,
And they will be able to find other new use case, like say for example, with the fixed rate on like two different currencies or two different tokens, you will be able to provide a forward rate for them to hedge, right?
mm,
For current market makers, like you mentioned about, they are heavily trading on the stable coin pairs
mm,
or some like a crypto pairs, but they can trade spot, but they cannot quote forward 1 to 3 months forward.
mm.
Why? Because there is no forward curve. There is no yield curve for those token pairs.
What do you think are the biggest challenges facing DeFi going into this year, 2024?
Oh, okay. I think the first challenge will be the regulation, right?
Mm,
So regulatory concern, I think, is one of the key things that people are thinking about, particularly for the newcomers, when they want to get involved into crypto, right? So of course, we have some good news at the beginning of the year, right? The U.S. regulators approved the spot BTC ETF, but still there's more like things to do, right? Because we have seen like MiCA rules in EU. We have we have seen some like a virtual currency tax fairness act, right? Coming. These are all the like factor regulations that will affect the future development of crypto and the DeFi. Right. So I think this is the key challenge that we face. Right. Of course, there is some other technology challenges. There are some other like new use case challenges that we also needed to take care of. Right. Particularly, for example, I just pick one. Right. That's wallet service provider. They spend a lot of effort on like account abstraction. Right? So this is the key areas that will improve the user experience and create the mass adoption.
So, what is your feelings about the Bitcoin ETF being passed? There's a lot of excitement saying, "Oh, billions of dollars we flood into the market only for BTC." There's excitement that ETF is going to come next. So now that the price of ETH went up like I don't know 20% ever since. Do you think it's really a big change? Because I think you're getting access to it, but not direct access. Sure, people don't have to worry about wallet abstraction because they're going through the broker, right?
Yeah.
And they don't really own it, so they don't have to do anything. They just say, "Oh, I own some Bitcoin," just like any other asset. Is it that big of a deal to you?
Yes, I would say it is. It's considered a big step
Oh,
forward, right? Because this will allow like general people to have access to Bitcoin without wallets,
yeah.
right? And then they can just use their current account with a security house, then just have the access of risk of the Bitcoin, right? Of course, this is good thing, but we look at the other the approval itself, right? So there's one problem is that there is the for the like a Bitcoin like a primary market redemption or subscription that is not allowed, right? So this is still a problem for a proper ETF
Mhm.
existence, right? So current approval is just like allowing a crypto like a Bitcoin fund to get listed, right? But you have to purchase on US dollar, right? And then it's like there's no so-called primary market. So
Yeah.
there is no incentive for the market makers to come in. They right. But I have to say it's already the big like step forward, and we're happy to see that.
Yeah, yeah. I guess if you look in the big picture, it is accepting a cryptocurrency, formally accepting it,
Yes.
right? You can argue, well, they only did it because their customers have been asking for it. Well, yeah, that's how it should be. If the customers want it, then you give it to them. And I don't know about these other assets that will come on board because I thought, the taxation side of things that would be quite interesting now, right? So on crypto side of things. Anyway, so when you go back to talking about security, you said basically you created your own zero knowledge, I guess,
Right.
solutions. Can you talk a little bit more about that and how was that experience even? Because I think zero knowledge has been around for a long time, and in applying it in what you guys are doing is actually really important.
Yes. So actually, we started to building this the protocol about a year and a half ago, and at the time, right, because when we considering the proper model we wanted to go, and we actually like look through all different kind of a layer two solution, and
Mm,
we find it's like since we want to do fixed income, right? So among the layer two solution, the DK rollup has the highest standard in
mm,
terms of security, right? So there is I think this is the only one direction for us if you want to do fixed income.
mm,
Right. And then since we go with a peer-to-peer, we don't do this on chain, right? We want a scalable solution, right? We go with
right.
DK, right? And thinking about that, right? So by using DK, this is the user's essay will be like secured by the mathematics
Right.
uh, cryptography, right? And then the user will need to sign their private key, and actually they do the execution on their own. And so we look through some of the DK solutions, and of course, at the time, a year and a half ago, there is no the the proper setup, right? And like what we see today, we see like a DK Sync, StarNet, they are already well developed. But 1.5 years ago,
Yeah.
uh, they're not there for us to build like a full fixed income like a protocol. So we decided to build on our own,
Mm.
right? So of course this is a challenge. So that's why some of the fixed income protocol they start about the same time with us, but they go faster, we go slower, but we will go with what we believe what we should do, right?
Right.
So that's why we build our own DK rollup. Right?
Oh.
So currently we are on testing now. And we also build like a force withdrawal and evacuation mode, so that there is no way we can rug pull, and then the asset, the user will always get back their
Right.
asset.
Well, that's important to know. So, how was the experience finding talent for ZK? Because I know there's, or at least I interviewed some, and everyone seems to think there's only so many good people in the ZK world. So, how was that experience?
Yeah. Okay. Okay. So I would say, luckily in Taiwan, we have a quite good like the pool of talent, and so we
Mm.
can find, and also that we have like a DK expert in India, we have a DK expert
Oh.
in France. There we just find them like a step by step, and then they are really good, and we have a good team and developing our the current DK setup, and of course that we will continue to improve, and we have a certain like a research effort, and
Hmm.
to prepare for the V2 version, right, in our like a DK setup.
Well, we all know that the friction from the user to platforms is still very high. And what else will help it go mainstream? Because I think fixed income in the DeFi space is very attractive for most retail investors when they look at their options, right?
So I would say, of course, the user experience is very important. That's why, uh, like we briefly mentioned about the wallets, and of course, for the protocol itself, the effort we can do is to improve our like a protocol, right? So that people can like use that very easily. I say, for example, like the setup we have, and to build our own DK rollup, and to build this off-chain calculation. So we can actually bring up our protocol like a centralized exchange on mainnet,
Mm.
right? So like you find a centralized exchange has a better user experience. We are
Mm.
trying to get there because we have a layer two solution, and then we can
Mm.
bring that over, right? So, and of
Okay.
course, a lot of education we need to know, right? If you wanted to bring us the one of the like mainstream adoption using fixed income concept on the trading, right?
Mm.
So then we needed to do a lot of education, because fixed
Right.
income is the most complicated linear financial infrastructure. It comes with term structure. It comes with a duration. It comes with convexity, right? It's
Mhm.
not a simple product. So we need to do a lot of education, and we are preparing for some TermStructure Academy, and also we build this order book to allow people to place order, cancel order, and use without gas fee, and
Mhm.
also they can use market order or limit order, and you can put a small size. This
Right.
is to help like a better like a mainstream like a mass adoption of the users.
Right. Right. So you kind of mentioned about Orderbook. Did you guys build that yourself? Because I know there's a lot of solutions, a lot of exchanges. They either buy like a license or white label some other person's technology to go to market very fast. So tell me a little bit about how you guys developed your Orderbook system.
Okay.
Yeah.
Okay, so the other books, okay, so the borrowers, I would say, maybe I give you like a quick example, right?
Mm.
So on the Aave V2, right,
Mm.
since inception, there are 47 of the borrowers. For the five mainstream tokens, they
Hmm.
actually repay after 30 days,
Mm.
right?
Oh,
I would
nice.
say
Yeah.
about 50% of them, right? So these guys, they are basically borrowing for long term. It's not borrowing for short term.
Right.
And
Right.
for the borrowers mainly coming from, I would say, from the traders, right? And
Hmm.
those who needed to, of course, some of the crypto service providers, right? And those traders, the particular DeFi traders, they wanted to use leverage, right? They wanted to use like put a trading strategy, right?
Mm.
So they normally probably they use like a Avian compound before, but because there's no fixed rate borrowing, right?
Right.
But in the future, they will be able to take like a fixed rate borrowing from here, right?
Mm.
So I would say the traders, there's some of the crypto service providers, even some of the miners, that
Mm.
they all have an interest to borrow fixed rates.
Okay. For the lending side of things, is it more of a trend for people wanting more long term rather than short term? Um, what is the preference these days?
You mean the lenders?
Oh yeah, lenders.
Okay. So I would say I will say it is on the basically coming for the fixed interest rate and certainty. And
Right.
in terms of a tenor, right now there's no crypto goes like more than 1 year, right? So
Yeah.
it's
Yeah.
not even for like 6 months. So
Yeah.
I would say it's gradually we will. I don't think we will have like a heavy 12 months like a trading
Right.
kind of thing happening. But we will see 1 to 3 months, right? The people will gradually extend their duration, right?
Right.
And for those like people who have like idle like tokens on chain, they don't want to put just in the cold wallet. They can
Yeah.
just purchase some of the fixed income token, and
Yeah.
also this token will be able to use as like a, you can think of a zero coupon bonds in our real
Yeah.
life, right? So when you go into uh, a bank, right? Your bank account officer may show you hundreds of different products, right? This hundred of different products, more than 90 of them, they use fixed income curve to
Yeah.
price, right? To hedge, right? So this is some like a new use case that we will be able to provide.
Mm. Okay. 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 So I guess with the new funding that you have, which by the way, congratulations. I know.
Thank you.
Well, let's go back there. I always ask the founders like, how many times did you have to pitch your company before you finally got the first yes? Or
Okay.
was it easy for you because you had a good you're working banking? Maybe you know a lot of people already. Yeah.
Okay, actually, yes, that's the one of the advantage I have, right? Because I've been working for 25 years,
Mm.
and but still, I think I talk to maybe around 80 to 100
Mm.
different guys in 4 months to 4 to 5 months time,
Yeah.
right? And to secure all this funding, and of course, I spent another 2 months time on working on the documentation with these VCs, right? Right. So
Mm.
the VC is very cautious in terms of documentation. That I can
Sure.
understand, right? So that's why we spend more times on quite some times on that. But during this period, I talking to like 80 to 100, and I would say it's not easy, right? As people think. I will say most of them they don't understand what is fixed income,
Right.
and they don't know, even they know, they don't understand the importance of fixed income and
Right.
why do we need that, right? So and of course some has challenged to me about you are doing too many things, right? You want
Oh.
to build a lending protocol, you want to build a DEX on secondary markets, you want to build your own ZK, right?
Mm.
But there is no shortcut, right? Because if
Yeah.
you want to go with shortcut, just like the other like protocols I've done, I don't think we will be able to build like a scalable, like a substantial fixed income protocol, right?
Mm.
So we put our heads down and continue to work for 1.5 years. Right. So and other challenges may come with that right. So and then some other says are you sure is there's no supply or no demand, right? So if there's no, it can be no demand for the fixed income, right? No, for the
Sure.
fixed rate borrowing lending, right? But to me, and working in the bank for so long, I cannot believe any financial ecosystem has no demand for fixed income,
Yeah.
right?
Yeah.
Without fixed income, everything you do is value today, value spot, value
Yeah.
right now, right?
Yeah.
And there's like if you want to do anything, any like a financial planning for 1 month later, you don't you don't find any tool,
Yeah.
right? then 100 years later, you will still like today in
Yeah.
DeFi, right?
Yeah. Yeah. That's true. That's true. So 80 to 100 uh, people that you talk to, did you like have to change your story quite often, or is it depending on who you talk to, and did you do research on their background? And you must have had to do a lot of education, I can imagine.
Yes, yes,
Yeah.
yes, exactly. Your question bring me like so many funny stories like back in my mind,
Yes,
right? Like
share
that
one,
during the
share one.
process, right?
Yeah, share one.
Yeah. So okay. So whenever I finish the pitch and I
Yeah.
go back and I think and I redo my presentation, right?
Right.
I change my slides and here and there, right? So like for every single meeting, I change it, right? Because some of them I feel it's their problem, some of them I feel it's my problem, right?
Right.
And even when I talk to the VCs who the representative, they are just like the age of my daughter, right?
Mm,
And but they understand more on DeFi, right? And I learned something from them too, right? And
okay.
of course, some others they some messages just don't understand, but that's fine. We see like a bunch of different like persons background, right?
Yeah.
That's fine, right? So I just keep changing, and then I change to someday like one of my colleagues come back to me, Jerry, am I not good? Are you going to fire me? I say why? I say because you keep asking me changing your slides, and I feel I'm not doing good enough. I say
Yeah. Yeah.
no, it's not your problem. We should keep
Yeah.
changing it, right? So
Yeah. Yeah.
because the frequency is too high, just keep changing every day, right?
Yeah.
So that's why the last few I'm getting better and better, and of course that's it's a learning process, and I found it okay. It's good because I have no experience on fundraising before.
Mm,
I was
mm,
in a bank. I was
yeah.
on the sales side. I don't need to pitch
Sure.
for the bank, but I don't need to pitch anything. Yeah.
Okay. Okay. So, what are your plans then for the seed money that you just received?
Okay. So of course, the first thing to do is to focus on our code development, right?
Yeah.
So the code development will covers like current like immediate development and our future plan, right?
Yeah.
And then we will focus spend our like funds on the security, right?
Yeah.
We will enhance our security. We do auditing and we do some like a penetration tests, like all different kinds of like a preparation for that.
Yeah.
And the third is the community, right? So we wanted to grow with community. We needed
Yeah.
to, of course, spend some money with community in terms of the building the activities or the educations or the and just bring more people on board. And
Mm,
particularly, I want people to understand what is fixed income, what is so important.
mm, mm. Well, let me ask. One of the things that I always hear from builders is around auditing. Auditing of smart contracts, auditing of code. Number one, to appease the investors, that you've had some checks and
Yes.
balances on your build. Number two is also for security reasons. But many builders I talk to says, oh, these companies, they charge so much money for these audits. And how do you manage your audits, and what process do you go through, or who do you use?
Okay. Yes. Correct. It's not you.
Yes, that's why you're asking for more money.
Yeah, yeah, right. So
Yeah.
we have already done two audits. One is done by ADBK, and the other one is the Hedgehog, right? So
Okay.
we have them to audit us our like smart contract as well as our like DK system code, right? So
Okay.
I think we are just like this morning, yesterday we are talking to the third audit company. Like
Uh,
I think this we will continue to do that, and
yeah.
because this is so important. It's not just to please our investors or users or
Yeah.
providing comfort. It is really something that we want to do it right.
Mm.
Right.
Okay.
So we just needed to continue to move on that and continue to make sure we are like we have a secure protocol because at the end of the day it's a fixed income protocol and there's
Yeah.
a lot of like a valuable assets in the on the smart contract that we need
Right.
to be careful.
Okay. So I guess along those lines, you also have to worry about the change in regulatory frameworks, and then being DeFi. I was It's one question I've always wanted to ask because I mean you're setting up your system, you're decentralized, and so what rules do you follow on a regulatory level? Like, how do you manage that?
Okay. Right now in DeFi, it is not really regulators focus. But gradually they will come over. I believe I like just look at my background. I am a believer of like a governance and a regulatory.
Mm.
It's something like important that we need to be considered whenever whatever we do, right? So we are monitoring the progress of a regulatory like improvement on DeFi, and also that we are considering to get the necessary license whenever, wherever, right?
Mm.
And just depends on where we are at that particular moment. I don't rule out that, and even for certain kind of the on-chain AML, the on-chain compliance analysis tool, we are considering, we are looking into that too, right? So
Okay.
this is something that we I believe like I should do, and to make sure that we provide like a comfort level for the institution adoption.
Right, right. Yeah. Well, that's what I was getting at. At some point, you're building this infrastructure for the future, and how is that going to comply with the environment? Um, but do you believe, like, the concept or the technology behind creating sovereign identity? This digital DID, digital identity that you can use anywhere in the world, where you don't have to carry your
Yeah.
passport, and all the governments can access, who you are. Do you think that it'll ever get to that stage in our lifetime to basically have all countries participate, or even at least the major ones?
Uh, I think it's possible when people, because we are using ZK, right?
Hmm.
So right now, if you look at all this like identity information, right, for each country, and some countries they share, some countries they don't share with each other,
Hmm.
right? And then for those who you shared, of course, that you can like go public on that and to the other party. But you don't share, you can use DK, right, to make sure that you can still have a certain uh, like a confidence level about this guy is legit or not, right?
Hmm.
So of course, I hope like sometime somewhere like a DKDID can be like can be the prevailing like tools for any like countries or authorities to use, right? And hopefully, I don't know when, but
Hmm.
if that can happen, I would say even for DeFi, we can have a better governance, right? And then we can have a broader use, broader adoption, right, for the DeFi use.
Okay. Okay. So previously you mentioned about you guys having primary and secondary markets on term structure, and gave a little bit of detail on what users can do. Can you explain, I guess, the auction mechanism in your primary markets, and how that works?
Sure. Yes. Uh, maybe first let me start with the how to use the our like primary markets, right? So
Okay.
for users, it's very easy as a borrower, right? You just need to select your collateral token type and amount, and then you select your intended to borrow token, right? And select the 1, 2, 3, 6 9 months time to maturity, right? We have a standardized maturity date for
Hmm.
people to choose, right? And then we can use that uh, for you to input your like a preferred interest rate to participate in the auction to borrow, right?
Hmm.
And for lenders, similarly, right? You just need to choose you want to lend and a certain for certain token, certain amount, and the interest rate, right?
Hmm.
So the way we match is that so we take the borrowers orders and we match them one by one, right? So
Okay.
borrower was coming and depending on the timing of their orders, and then to match with with lenders. The lenders were coming with the level of their orders, right? So the lower the interest rate, the higher the priority for lenders, right? So that we do the match, and the match will be a Dutch auction, so it's a uniform price auction, right? So that means the borrower may borrow at lower interest rate than his order if the demand is high, right? So the lender may lend at a higher interest rate, a better interest rate, right? So if the demand is not, it depends on how much the demand is, right? And and then everybody will get the same price for each match, so that you don't need to worry about you buying something too too expensive, right? More expensive than the other guys, right? It is in the same match, right? So this is how we do the auction.
Okay. Yeah, so I'm showing it on the screen here. It says a lot of people use like the underlying token, ETH, wrapped BTC, USDC, things like this, right?
Yes.
Okay.
And of course, we are adding two more eligible
Okay.
collateral token. That is SDAI and
Okay.
RevSegETH.
Okay. That makes sense. And then it says here 75 to 90% LTV.
Correct.
All right.
It depends on which pair, right? It can be like
Sure.
ETH to stablecoin or stablecoin to stablecoin.
Right. Okay. And then you can maybe explain the secondary market, huh? A little
Yeah.
bit? Yeah.
Secondary markets. We use the Orderbook for the secondary markets because
Right.
it is the fungible token, right? For the wherever you are, as long as you are having the same maturity day of the same base token, then you
Yeah.
can trade on the secondary market, and you will be able to leave your limit order or the market order and to trade. Right?
Okay.
So this is the we also have like a small ticket size allowed for people to use, right? And we
Right.
hope like people can easily to use this like a platform to manage their risk, to handle
Right.
the risk.
Okay. And then you also have a repo market.
Yeah. Okay.
Yeah.
So Ripple market, we haven't. So it's not coming up on this the mainnet initially.
Right.
As we planned, we put the Ripple market at a later stage. So
Okay.
we wanted to focus first on the primary and the secondary market. But of
Okay.
course, I know when talking to some of the traders, they actually expect the Ripple markets because
Yeah.
it allows to get a better capital efficiency, right?
Yes.
So
Yes.
yes. So we will do that. We will get there, and
Okay.
the Ripple market best fees allowed the people to use those fund tokens as a collateral and to
Yeah.
borrow. Right.
Yeah.
So in the Ripple market, we can have like a fixed date, like a short dated 7 days or 3 days, or
Right.
we can think of the different ways of like a non-maturity date on chain. So it's possible. So we are still working on it now.
Yeah. I guess what your main point about investor, if they really don't understand, how finance works, they will look at your technology and says, "Oh, you're building this, and you've got an order book, and then you're talking about ZK. It's too much. Why so many things?"
There's no
Right.
shortcut.
Yeah. Exactly.
There's no shortcut. They have to.
Yeah. Exactly. Okay. Let's see. What else was going to ask you? Maybe we can talk about what other products do you have beyond fixed income? Do you have anything else planned in the pipeline at some point?
Yes. Like I said, with fixed income curve build up, right? You can use discount factor, right? With discount factor, you can price interest rate swaps, right? And with discount factors, you can use interest rate parity theory, right, to price forwards, to
Hmm.
price term futures, right? And currently, we see some centralized exchange they have a term futures,
Mm.
or there's some forwards, and that's something that you can find arbitrage or relative value to trade with, right? And of course, with futures and term futures and forwards build up, right? Then you can use that to hedge your option, right? So
Yeah.
currently there is option markets in crypto, but they cannot hedge forward, right? So
Right.
I would say with the forward market build up, the option trading value can we can make it like a 10 times more bigger than today.
Okay. So then where does real world assets? That's like the big news that people are talking about these days. How does that fit into your plans? Like, are you going to use that as the underlying asset to some of these fixed income products?
Right. Okay. So before I talk about real world asset, I think that the one thing that we need to con- consider is in any financial ecosystem,
Hmm.
you need to think about the money supply,
Hmm.
like a money circulation, right? You need to think about the credit supply, right? So okay, then look into the RWA. So if you have a apartment, like no matter you're living or not, right? What you want to do with it if you're not selling it? You
Rented.
take a
Yeah.
mortgage. You take
Oh
a
yeah.
mortgage,
Yeah.
right?
Yeah. Yeah.
And then if you tokenize your apartment, what do you want to do? Still, you want to do the mortgage, right?
Yeah.
Because this will have a money circulation and a credit supplies keep going on, right?
Hmm.
So providing the multiple effect, right, for the money supply, right? So this is something that it's nature for any financial ecosystem to grow, that you need financing, right? So let's say
Right.
RWA, we need to find a way to do financing for them, right? It's not the end of the like a token investment. It has to be just in part of the circle, right? So we in the future, right? Of course, this is one of the will be some of the RWA we are we actually targeted, and we talked to some of the service providers that we will take them as eligible collateral here, and then we will do the financing or through the auction or through the way of to provide the market for them, right?
Hmm.
And for both borrower and lenders. Of course, some of the collateral or custody handling that we need to consider, which is not purely DeFi. We have
Yeah.
to go with a partially DeFi, right? Partially like a custodial or
Yeah.
RWA or regulatory consideration.
Yeah. Yeah, for sure. I think if you're moving, I always thought if you move into RWA, it's gonna be a hybrid model. You're gonna have some traditional centralized, processes, and
Yes,
then obviously then some of it is digital.
yes.
But I think that's always been one of the challenges, and people have been talking about RWAs for years. It's not
Yes,
easy.
yes.
Yeah,
But if you think about it, like some institution, they have a forecast like by 2030,
yeah,
there's like a trillions or more than 10 trillions of RWA. Then I think the one thing fundamental infrastructure they need to have is the fixed income.
yeah, for sure, for sure. All right. Well, last question I have before we end this podcast episode. I did want to ask you, what are your thoughts about the DeFi crypto industry in general? I mean, you've been in it long enough to see all the crazy stuff that happened, and I don't know, maybe you're just focused on building, but what are your predictions?
Yeah. Okay. I will say the reason why I jump into this because I believe this is like a the crypto, right? The DeFi will survive like for 100 years, 200 years, and perpetual, right? Forever. So we need to think of a way, right? This is for our next generation. How do we build up this the infrastructure is suitable for them, right? Because we see the blockchain technologies just keep improving, but we don't.
Mm,
But if you look around, uh, outside of your crypto events, right? How many people? What percentage of people they fear blockchain has impact on them, right?
yeah,
Not much, right?
yeah,
So I think this is one of the way we can think of that when and how we get the people feel the blockchain is important,
mm,
right?
mm,
So we want to get there in the future and where the blockchain can really apply to people. So that's why when we talk about like RWA, there's one thing I can think of is that we really need to connect the blockchain technology into real world, right? So the banks are doing their blockchain technology for their like a trading activities or custodian business, right? All these transaction banking business, right? But these in looking at the crypto world, how does the people do crossover, right? So right now I think regulators play the key roles, right? And to watch the gates and to make sure what can go through, what cannot, right? And we need to look into all those channels. When is permissioned? When what kind of like a product or service or technology is permissionless? And then
Yeah.
where is the channel to bring this permission and the permissionless stuff together, right? So
Right.
I think once we find all those channels and we make through that, then our lives and will be really, really connected with like a blockchain technology, right? So
Right.
right
Right.
now you say, okay, our lives is connected to internet technology. Okay, everybody agree, right? And but when you talk about the blockchain, not really. And we will talk about the AI, yes, many, right? So that's why we need to think what is the channel that we should focus on. And I would say it's not. It's a really high level like a thought. It's not like about the technology of a certain area
Mm.
or like a layer two or wallet or no. Right? It's really really need to think where and how we can get there. And then
Yeah.
we wanted to create new use cases. The key like keywords is new use cases.
Mm.
If we can find new use cases, then that's the way to bring this into the like human life.
Yeah, yeah, I agree. I agree. I think use cases, especially when it comes to blockchain and what makes it relevant for the mainstream, and that in itself, for me, I always go back to identity, right? So I think about that's something you have to worry about all the time.
Yes.
Sometimes I can, call the bank sometimes and they verify who I am. They ask so many questions. All this information they actually shouldn't have to have. It's
Yeah.
so personal sometimes. So then if you can
Yeah.
avoid protect your data more and actually own your data and even monetize it if you want to talk about internet, then people get excited. Oh, you want to use my data and I get a little bit of
Yeah.
money or tokens, whatever it is, they get back in return. I really believe things like that, then people will care. Otherwise, today, the underlying technology, whether blockchain uses it, which L2 is used, they don't care. Just as long
Right.
as nothing bad happens to them, right? They don't
Right.
get hacked, identity not stolen, then they're
Yes.
okay. Yeah.
Yes.
Yeah. I
Yes.
don't
I
know.
would say that is also the key things that we needed to to solve, right, before we
Yeah.
go like a mass adoption.
Yeah, that's true. That's true. Well, anyways, hey, Jerry, thank you so much for your time and thank you for breaking down the product that you're building. I always want to ask these type of questions. I think my audience is quite always willing to learn about new products that are out there. Good luck with your expansion and, taking that money and doing and building more stuff for your platform, making it better.
Thank you.
Hey, so that concludes this episode of the Startup Voyage podcast. I would like to thank all of you for listening to this episode, and I'd really appreciate it if you leave any type of comments that you'd like to share because it helps to feedback on how I deliver these podcasts.